Hello everyone, this is Shubham from Sumit Capital, and today we are going to discuss about a topic called sentiment analysis and how it can be used in the field of finance. So, what is the need of sentiment analysis? As humans, we can easily interpret the attitude of an article. An average human being reads about 300 words per minute, and it takes him about 2 minutes to read an article of 600 words. As a retail investor, it is possible that you might have tens or hundreds of companies in your portfolio. It is also very practical to assume that some of the companies might generate some headlines which could give the way to hundreds of blogs or thousands of social media mentions. So the point being, it is impossible for humans to keep up with the massive overload of information, and this is where sentiment analysis comes into play. So now we come to what is sentiment analysis. So sentiment analysis is a subfield of natural language processing where it uses text-based analysis to identify subjective data from any article, such as its tone, its emotion, or the opinions stated in the article, to identify whether the article is positive, negative, or neutral. So let me give you an example of where the sentiment analysis could be used in the field of finance. Let's say a company has come up with its quarterly results and it wants to know the investor's mood. So what it could do is it could go on Twitter and over there, instead of going tweet by tweet, instead of analyzing tweet by tweet, what it could do is it could capture the real-time data of tweets mentioning the company, and it could then use sentiment analysis on the tweets data to identify or to quantify the investor's mood. Now let us discuss what role does sentiment analysis play in trading. When used in trading, a sentiment analysis could help a trader identify directional signals and help him assess whether to hold a stock in his portfolio or sell it. The most conventional way in which this technique could be applied in trading is that after applying sentimental analysis on a stock data, if the sentiment around the stock is positive, we can go ahead and buy it because of the behavioral assumption that if there is a positive news around a stock, all the investors and traders, they rush to buy the stock and hence increasing the price. And if the sentiment around the stock turns out to be negative, what we can do is we can short the stock. In investing, shorting basically means that you sell a piece of a stock which you do not own, hoping that the price of the stocks would fall, and when it does, you buy them back in order to make a profit. Now let us talk about approaches to sentiment analysis. There are basically two ways using which you can perform sentiment analysis. The first one being machine learning based approach, and the second one being lexicon based approach. In machine learning approach, we apply multiple types of supervised and unsupervised algorithms to our training dataset. Some of the algorithms include naive Bayes classifier, decision trees, and clustering. The second approach is the lexicon based approach, which is also the most widely used and the most robust one. Under lexicon based approach, there's a method called bag of words in which we assign a score of positive one and negative one to the article, to the positive and negative words in the article, and the final sum gives us the polarity of the article, whether the article is positive or negative. So now let us talk about a case study involving sentiment analysis of a company called GameStop. So GameStop is an offline based video game retail company, and there also features an online user forum called Wall Street Bets, which is hosted on the social networking site called Reddit. This forum is known for its discussions on investing, trading, and other financial topics. In December 2021, the users of the forum decided to collaborate and started buying GameStop shares. This mass buying of GameStop shares was in response to large number of short positions taken by hedge funds, by very large hedge funds, one of them being Melvin Capital. As I explained earlier, hedge funds take short positions because they bet on the stock prices to go down, and if and when they do, the hedge funds make billions in profits. But because of the mass buying by the community members, the stock prices kept increasing and it reached a point where they increased by 1600%. Because of this increase, the Melvin Capital had to close its short position and incur billions in losses. Later, it reached a point where the brokerage firms of the US, most notably being the Robinhood, had to intervene and stop trading of GameStop shares on its platform. Had the hedge funds employed sentiment analysis and analyzed the user forums, they would not have made such a mistakes and would have saved billions of dollars, $20 billion to be precise. The after effects of this incident were drastic. In Western markets, although the hedge funds have been making use of sentiment analysis since the early 2010s, but after this incident, they started taking the activities of retail investors more seriously. New startups emerged in the space to provide real-time sentiment analysis of listed companies and stocks to stay ahead of retail investors by analyzing websites such as Twitter or online user forums. Big companies like Bloomberg have jumped on the bandwagon and have started providing sentiment analysis indices as utilities. The extent and the need of sentiment analysis can be seen in data analytics competition platforms such as Kaggle, where companies are willing to give out rewards as much as $100,000 to data scientists, which can create algorithms which can accurately predict the market moves. Now let's talk about role of sentiment analysis in Indian markets. Sentiment analysis in India hasn't gotten a chance to make a public appearance as of yet, but many mutual fund houses in India, especially bond-based mutual fund houses, they employ sentiment analysis to assess an investor's point of view regarding a stock and then conduct thorough research around it to generate extra returns. In a recently conducted interview, founder of Quant Mutual Fund Sandeep Tandon talks about the methodology where they use sentiment analysis along in conjugation with other factors such as macroeconomic trends and geopolitical situations as inputs for their model, and in turn model tells them whether a stock is hated or is popular. So here we have reached the end of the video. Please do let us know your thoughts on the topic. Thank you for watching the video, and please check out our website.